Let's get back into it. As far as investment strategy is concerned, my next guest saying somewhat erratic rise and fall on equity markets has created an appetite for funds to use a variety of strategies, both traditional and non-traditional, to manage that volatility. To take us through it, Johnny Francis joining us from Equity Trustees. Johnny, good to catch up with you. Thanks for joining us. This stems from what you call the 100 in your research. What do you mean by that?
Thanks, Andrew. Good to meet you. So look, the 100, it's really an analysis of the last 100 products or vehicles that we established as a trustee at Equity Trustees. So it roughly covers the last sort of 18 months worth of activity that we see in the market. As the largest outsourced provider of trustee services in Australia, we're in a somewhat unique position where we have a very broad range of products across the whole market, and we have exposure to a wide spectrum of asset classes. So there's quite a lot that we see. So as a result, we began an initiative last year to start analysing this data, having a look at the trends, the fund types, the asset classes, the vehicle structures and the investor types, and also to see where the money's flowing between those different products. So, the driver behind this really was to create some meaningful information and statistics to both existing clients and prospective clients around how we can guide them on their thought process for product design, basically.
All right, so let's then take a look at what's proving popular, particularly as far as the type of fund. What are you seeing here?
Yeah, so look, in the last 100 funds that we launched, we did see more global equity funds really being launched in the last 18 months. And I think the reason for that was after a sort of a tough FY22 due to investor demand, a lot of clients repositioned themselves to take advantage of what would be a better FY23, and largely that was the case overall. I think historically we look after some large global fund managers who only run global equity strategies. So quite a lot of those managers also launched products really to complement their existing suite of funds. But I think the driver there was really two factors, one being investor demand, but the other, clients looking to take advantage of any upsides in FY23. Following on from that, we saw fixed income was extremely popular. There was a big push towards fixed income products with exposure to both domestic and global fixed income assets. Now, this trend really sort of took off towards the latter part of FY23 as interest rates were rising and returns were looking much more attractive. So what we saw was this sort of sudden rush to lock in capital into some of these more long duration products. I think we also saw some fixed income style alternative funds, particularly feeder funds. So these funds invest into things such as Cayman vehicles, Luxembourg funds, Delaware LPs, and typically these are sort of long-term 8 to 10, 12-year lock-up vehicles with some very attractive returns.
All right, so ETFs continuing to remain popular too. What's the trends you're seeing there, and why is that?
Yeah, so I think there's been this real sort of push towards having retail products in the market. I think the retail landscape's certainly more complex. There's much more regulation, of course, but I think fund managers are almost being forced into looking at retail products, particularly as some of the large super funds look to internalize asset allocations and really only outsource the more challenging asset classes. So I think the ASX released some quite interesting data recently around the average Australian investor. We can see now that they've got more income, they've got more investments outside of their home and outside of super. So the younger generation investor is really looking to have ease of access and ESG thematic products. So the ETF is really the perfect home for that. We've got 12 ETFs or listed products that we look after now. We've got a large demand in the pipeline, and we think that the ETF market will continue. We saw recently, I think it cracked almost 150 billion in Australia now. So we do think that trend will continue as well. And if you look at some of the super funds, I think Australian Super Direct now offer ETFs in their portal as well. So it's definitely a trend for the future.
Johnny, how popular are alternative investment assets at the moment? And what are some of the examples?
Sure. So I sort of mentioned we did see some more sort of fixed income style products coming to market in the latter part of FY23. The alternatives are proving very, very popular. A lot of these are closed-ended vehicles They're feeders into offshore master funds. They're really around sort of infrastructure assets, private markets, credit, senior secured loans, and they tend to be more long duration. So I think the FY23 vintage for those products will be very attractive.
How about digital assets?
Look, 18 months ago, there was an enormous push to sort of commoditize these products and get them to market. We saw a few funds get away. There were some ETFs in the market that had indirect access to digital currencies and cryptocurrencies. Some of those products didn't fare too well. They probably launched at the wrong time. And I think until there's more sort of clear regulation for these types of vehicles, we don't expect to see an enormous demand.